Good morning, everybody. Hey, welcome to Monday, April 13th. I hope that you were able to have a enjoyable Easter weekend. I know it's difficult to be with family and friends during this time, but hopefully that you were able to at least get some downtime and to talk with your family on the phone and Skype and FaceTime and all those type of things. We were able to actually have a little bit of a family gathering versus just like this on a Zoom meeting and got to visit with our kids and grandchild. And so a great time. I know it was different, but hey, he is risen and we are thankful for that. And we know he is in control. So, hey, we got a lot to talk about today. Though we are just getting to the beginning parts of earnings season, and so we're not sure exactly, what that's going to look like. And we know it's going to be bad, but how bad, that's going to be the question as we start to see a little bit here and there. Nothing major today, but Dave and I will start the conversation about what's happening this week. And looking forward to our conversation today when he joins us next.
107 Light FM. That's Phillip Collins and Du Bois and the band there. It's 8:37. That's 23 before 9. Time to check in on your money and find out what's going on Wall Street. It's been a relatively quiet weekend news-wise, but we kind of wish we'd done some trading on Friday because we were pointing up on Friday morning. Not quite so good this morning. Let's head downtown to Statler Financial Services, where Phillip Statler is comfortably ensconced at an undisclosed location and has a finger on what's going on this morning. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well. I pray that you guys had a blessed Easter day. I know it was quiet. It was different than what we are used to, but Easter nonetheless.
Absolutely. The Lord is risen indeed. Hallelujah. It was it was quiet at our place, too. I was whining at you on the phone before we went on the air that my poor bride is going shack happy. She's the one I won't let out of the house. So kind of thinking, I got 2.5 more weeks of this crud at least. And the way things are looking, we might go a little longer than that, right?
Yeah, we don't know yet. I mean, I know there's some rumblings in Washington, D.C. to try to get some wave of the economy back up and going. How fast and what wave that becomes and what that looks like, we still don't know. And I think they're still working on trying to get that figured out.
And to the credit of the loyal opposition and the administration trying to stay down the middle, Trump pretty much has a track record at once he makes a decision, he doesn't reverse it after getting advice. He just talks about reversing it, and that has the loyal opposition flying around the room backwards. We don't know what's going on, and it's all going to determine upon how the curve gets flattened nationally and state by state. If we have a couple of states that are way down the downslope, maybe it'll make some sense regionally. But for the moment, bottom line is nobody knows, right?
That's right. And again, that adds that uncertainty to the marketplace, and the markets do not like uncertainty.
And that's something we preached for years, that they can take bad news, they just don't like not having any news. Setting the table this morning before we talk about what's going on today. Yes, on Thursday, I got to back up 4 days. On Thursday, we had a decidedly good green day. Dow was up 286 points. That was almost 1.25%. NASDAQ was up by 63, and the Standard & Poor's up by almost 40. That looks pretty good. Actually, a relatively routine number, too, not as wild as swings as we've been seeing. Then we get into the weekend, and it's time for a few of the investors to say, maybe I need a little extra cash, right?
Well, that could be it. We don't really know what causes people to decide to sell, but one thing it could be was the run-up we saw over the last week, Dave. We saw a huge increase in the market last week off of its all-time low, not all-time lows, but its lows back several weeks ago. And because of that, it's not unusual to see people that are short sellers or people that they've had a nice run-up in the trading and decide to cash out. Remember, what we're seeing right now, Dave, is really and truly the traders, not the long-term investors driving the marketplace.
Absolutely. The hedge funds make their decisions and allocations almost day by day. I was telling you, I think last week, midway through the week, that the annuity that I've got into some various funds, I'm getting almost daily notices that their fund managers are moving from some risk to no risk and back and forth depending upon what the market is doing. And those guys that throw gobs of money around at once, they can change the market, make us all wonder whether something big is going on when it really boils down to a strategy change on some major funds.
Well, that and just guys making money, right? They're the traders and the robos and the institutional guys who are all doing basically artificial intelligence and running computer programs. Those guys trade by the hour on what happens. And so that's what we're seeing really right now. Again, not the long-term investor that's looking at a good deal and hoping to hold it and ride it all the way through.
Understood. It does look like there's not a flight from equities going on over the weekend. I look at the bond rates, and while the bond rates are off by a little bit on the yield, it's not a major change. It doesn't look like we're looking at a major strategy change on behalf of the big investors right now.
No, it's not, and I think oil still is playing a little bit of a role. You know, we had the whole Russia and OPEC trying to get their act together and come to an agreement to reduce production because we've got so much of supply right now that I think I saw somewhere you said last week that they can't find a place to put it all, and so they're going to have to reduce their production.
Yes, Chad, the storage is becoming the biggest challenge. And looking at the price of oil anyway this morning, it doesn't look like we've got an agreement that's changed the price of oil all that much.
No, definitely not. It's not definitely making a big change at all.
Understood. Not a lot in terms of actual reports going on this morning. I noticed the big concert company, Live Nation, that's had to cancel a pile of concerts. They kind of put out some guidance saying, hey, don't worry, we got billions of dollars worth of liquidity available to us. I don't know whether that means they're keeping our ticket prices or not, but at the very least, we've got one company that's saying they'll be all right. And you're hearing about a bunch of layoffs, aren't you?
Well, yeah, we're still looking at, Walt Disney World is furloughing another 43,000 workers that they came to an agreement with the union. So these are unionized workers that are getting furloughed. But I want to talk a minute here about J.P. Morgan Chase. They've come out and they are raising the borrowing standards for most new home mortgages. And so they're raising the standard now to having at least a credit score of 700, must put down that 20%. So, and people say, well, why? Well, we're seeing a lot of people that can't make their mortgage payment right now. So that's part of it, right? We've got mortgage servicers that are saying, we've got 30 to 40% of the folks asking for forbearance of their mortgage payment for this month. And so that's part of the issue. The other issue is a money supply issue. Banks are scrambling to get some money. I did see over the weekend that we did have our first bank failure up in West Virginia. I believe it was a small local bank that was already in trouble, but this kind of exasperated that issue, and we are going to still see some bank failures because of this, because of liquidity when it comes to the money supply.
I would imagine that there's a whole bunch of different factors getting in the way. The mortgage standard tightening doesn't shock me much, although I hate to see it happening. Just with the number of people in jeopardy of having a job, somebody applying for a new mortgage, the mortgage company is going to be looking a little bit more askance at any application that shows any flaws. But the bank failures, that kind of strikes me as interesting. Is it the federal government not funding the bridge loans as fast as they were expecting? What's causing the crunch?
I haven't seen exactly, but I know that there is just I've been hearing this from one of the analysts that I follow quite a bit, who actually has a relative that's in the mortgage business, and he's been saying now for about 2 weeks that this is going to be an issue. And we're going to continue to see more and more of this going forward.
And right at a time where we're looking at a lot of businesses going and looking for bridge loans to make their payrolls up, federally funded or not, if there's not the money to write the check, that's difficult.
You're absolutely right. And so that's something I think we'll have to keep an eye on, because that could be an issue that nobody really thought of.
And that's a systemic issue that could make our consumer-driven, unemployment-driven, one health crisis-driven recession sound a little bit worse in the final analysis.
Yeah, that is true. Hey, let's talk just a second, Dave, because I know we'll wrap up here in a little bit. But let's give just kind of an outline of the week, because I think tomorrow's going to be kind of a big day. We're going to have the first banks come out. First Republic Bank, JP Morgan Chase, Wells Fargo, all come out tomorrow before the market opens. So that's going to be a good start to what we may be seeing this quarter, followed by on Wednesday, Bank of America and some of the other PNC Bank and the likes of those guys come. Citibank comes out too. So we do have a lot of information coming out this week on earnings and on the economic front, Dave.
Absolutely. The banks could be interesting, especially given what you're saying about there possibly being a liquidity crisis out there. Guidance coming out of those banks, well, they probably won't be willing to go out on a limb and give us an idea as to what their P&L is going to look like. What they tell us their challenges are going to be really interesting and something worth reading into starting tomorrow.
Yeah, it will be, Dave. That's one of those areas that we are definitely going to need to pay attention to.
Absolutely. What do we got for government reports coming out this week that could be interesting? Macro-wise, I haven't seen a lot on the calendar. I know
we do have some big stuff coming out. Tomorrow we have import and export prices index coming in. On Wednesday we have crude oil inventory after you and I talk. We have the New York Empire State Index. That one I think will be interesting, as well as we have retail sales coming out on Wednesday. Thursday, we'll have the normal initial claims number, as well as building permits and housing starts. So that's kind of the big things coming out this next week.
All of which would be kind of minor nod items on a normal week basis, but how big the decreases are going to be either reassuring or frightening, depending upon how we look at it. Setting up the table again this morning, up day on Wall Street on Thursday, but now we've had Friday, Saturday, and Sunday to mull things over. And as you say, some of the big money guys and their computers are making adjustments 45 minutes before we open today. Where are we heading?
So we're heading a little bit to the downside this morning, Dave. Not significantly compared to what we've seen in earlier days, but we got the Dow down about 0.3, which is about $73. We got the S&P 500 down 0.3, about $8.60, and the Nasdaq's down again about 0.3, down 25.50. So everything seems to be somewhat to the downside after closing on Thursday up. If we look at some of the commodities indexes, we've got a silver down almost 3%. And we've got gold trading off of highs of down almost 1% to $1,736 an ounce right now. Crude oil, we do have heading up today 1.1% to $23.02 a barrel right now.
All right, not frighteningly high, but heading in a higher direction anyway. World markets mixed overseas in Asia at the close early this morning. They didn't know what we were going to do, and they were responding accordingly. Japan was down. The Chinese markets were generally up overnight. Europe, as a rule, trading up this morning so far. Possibly that's on good news for their coronavirus trends. Phillip, you mentioned that the computers are driving the markets these days as much as any individual investors ever could. That means having an idea as to how to hedge one's bets counts for a lot. Now, that's where you come in. How do I make contact with you during these strange times?
Dave, surprisingly, our phone, we're getting people deciding that they really do need to find out how much risk they have in their portfolio. And to do that, give us a call at 863-382-0037 to schedule your phone appointment. We can talk for 15, 20 minutes. We can do a Zoom meeting. Hey, we are a essential business, so we can't meet you at the office, even though right now we are pretty much working from home. So all those ways, follow us on Facebook, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730. Let me just give you an idea. After we get off this morning, we will be pushing out our recording from this weekend's radio show on Facebook. So like us there, look us up, look for our recording where we talk to a doctor from Johns Hopkins University Medical Center about the coronavirus and some of the outlooks there.
It was a great program. Anybody that missed it really needs to catch it on Facebook, Phillip. My compliments.
Thanks, man. I appreciate it. And hey, you have a great day, and I will talk to you in the morning.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, folks, like I said at the beginning, now's the time to determine how much risk you have in your portfolio. And we have been getting folks, and thankful for it, calling to find out how much risk they have in their portfolio. So give us a call right now at 863-382-0037. Have a great day, and I'll talk to you again tomorrow. Hey, man.